Alright, hello, and welcome to Camel Finance. I'm your boy Camel, and hello and welcome to the new subscribers. Welcome back to the original subscribers. As promised, I've returned Thursday morning, following on from FOMC. I avoided getting chopped up. I hope you didn't get chopped up if you were trading. I hope you made some profit if you did, and if you abstained like me, I hope you enjoyed whatever you did with your free time. The Bank of England today is expected to raise interest rates to a 13-year high, and at the same time you've got Johnson warning of very severe inflation that could get worse on Good Morning Britain. So the FOMC yesterday, I've got the highlights for you here. The Fed has said that it's going to hike its benchmark interest rate 50 basis points or 0.5%. The Fed also said it would start to reduce its balance sheet in June. This is the biggest rate increase since 2000 for the Fed, but it was largely expected. I don't think anyone could be too surprised with a 50 basis point hike. And Powell did say the central bank was not considering an even more aggressive hike in future meetings, and that a 75 basis point hike was off the table. And I think this is what spurred the rally. I'm going to get into the charts and what I think in a minute. But I think that the Fed providing clarity and saying that 75 basis point hike was off the table gave people enough breathing room to be happy to buy some stocks and some assets in the short term. The Fed made claims that expectations are inflation would start to flatten out. And this is a bit disingenuous, to be honest. We're talking about inflation relative to the same month last year. So the rate of inflation will decrease, but inflation is still compounding. So that means if, March this year was 8.5%, if you use their phony metrics, if next March is anything less than 8.5%, then they'll say, hey, well done, happy days. Inflation is being tamed. But it's kind of disingenuous because, if it's 7% next March, that's 7% on top of the 8.5% this year, which is on top of the 2.5% last year, so on and so forth. So inflation is still compounding. And what they talk about when inflation is flattening out is actually the rate of inflation, not inflation itself. Powell said inflation was much too high and that another 50 basis point hike would be likely required at the next meeting. That's the highlights for you. I'll give you my take quickly and then we'll move on. My take is that the Fed is going to keep hiking until something breaks, so that would be a big crash, or until the inflation rate has slowed down. If the markets crash very quickly, then the Fed can decide to turn the printers back on and prop the markets back up and say, oh, the economy wasn't strong enough yet. The economy wasn't strong enough yet to raise the rates. Or alternatively, if we can get inflation below 8.5% and call that 8.5% inflation reading the peak inflation, then they'll be able to use this false inflation metrics to say, look, we've tamed inflation, mission complete. And I think once they've done this, they can use their mission complete narrative to justify pivoting on the rate raises. So all paths lead to them pivoting on their rate hikes. They just can't keep raising rates like this. Things are going to break, or even if they don't break and they do just tame inflation, the rates are going to get so out of control that the central bank starts to go broke because they can't honour the interest rates. I'll show you that in a second as well. And thus, stocks, gold, Bitcoin, houses are all going to go to the moon, as we are eventually going to see this pivot, and I believe we're going to see it within the next couple of months at the most. I think we're going to see this pivot pretty soon, 1 or 2 more months, and I think we're certainly going to see it. And as they pivot and turn the printers back on and start to ease monetary policy again exponentially, as it always has to be exponentially, then we are going to see stocks, gold, Bitcoin, houses, etc. all to the moon as the dollar is inflated to death. So in summary, the inflation is not going away, but the rate of inflation might slow in the short term. We've got here the US 10-year bond yield. It briefly notched over 3% and now it's trading just below that again. So do we get a breakdown of this soon? The thing is, if they keep hiking rates and this keeps going up, and you've got to understand, when these bond yields get above 3.5%, the Fed starts to go broke, and when it gets above 4.5%, that the Fed will actually be broke. It can't honour the amount of interest once it's up in this range, so something is going to break. The question is, what's going to break first? And when it breaks, of course, they're going to be forced to pivot. If we look at the US long bond, then this begs the question, doesn't it? I have shown not this exact chart, but I've shown a similar chart to this before. You can see that we make lower highs every time. And so is this going to be a lower high and a reversion to the mean, or are we going to break out and this time really is different? Well, although it actually feels, admittedly, even to me, someone who's been in the market for a very long time, it feels to me like this time is different. It actually does feel like that. But I can tell you from experience, it's never different. Why is it never different? Because humans are incapable of learning. Humans do not learn. They make the same mistakes over and over and over again. Humans never ever learn. And so this time, it's not, smart money wouldn't bet on this being the breakout, in my opinion. The reversion to the mean has to come. Doesn't mean it has to top right now and 3.03 from yesterday or whatever. It doesn't mean that that has to be the absolute high. We could definitely go higher short term. But I do think, if you keep zooming out, we are going to see more and more lower highs, lower highs, lower highs, lower highs, lower highs. That is the pattern. And I would think that a reversion to the mean comes fairly shortly. At the same time, further evidence, the dollar, for now it's broken out, seems to be back testing and wants to hold above this resistance. Is it going to flip this and go? Again, everything's on the table at the moment, everything. So it could run the hundreds for sure, up to 110 and higher. But do I believe that's going to happen? Not really. I mean, how often have you seen a parabola like this resolve like that, straight up in the air? It doesn't happen. It doesn't happen. So likely we are going to see a double top or a slightly higher high or whatever, and it's going to violate this parabola and then crash down. That seems like the most reasonable thing. The timing of this, all the stars seem to be aligning. We've got the bond yields right at resistance, wanting to revert to the mean. We've got the dollar well overextended, looking for a decent pullback, at the same time as the Fed is raising its rates and getting to the point where something is about to break. Something is about to force their hand to pivot more dovish. Either the economy is going to break and tell them that it's not ready for them tightening into a slowing economy, or they're going to say that they've completed their mission, they've tamed inflation, and therefore they can justify being a little more dovish. So either way, the stars to me seem to be aligning. Yesterday we got a strong bounce. I've said before on this channel, my plan is to trade the breakout of this line. You could of course take a long here and put a stop below this low, but for me, experience has told me that just because we got a strong daily close yesterday doesn't necessarily mean that this is going to follow through. So I'm going to proceed with caution here. I'm not looking to dive in. Tomorrow will be Friday, and as you know, I don't take weekend risk on as a swing trader. That's just not me. You do you though. The equity markets and the futures, they're down a little bit. Dow's off 162 points, so the futures are slightly red. So I'm not looking to rush in here. A break of this trend line for me is certainly a decent entry. You could of course take a long and put a stop down here. It's entirely up to you. So short term, I kind of expect more volatility. Could we make new lows? Absolutely. Could we break this and make new highs? Absolutely. Everything's on the table at the moment, and I think a little bit more patience to let the dust settle will be able to give us a superior entry than just diving in now and putting a stop down here. Let's take a look at gold. Gold didn't quite bounce off this level that I thought it might. It didn't quite make it down, but it is sort of behaving exactly as we thought it might. Again, more patience. I'm looking for a break of this trend line. You could, of course, take a long here and put a stop down here. Entirely up to you. I'm going to be playing the breakout of this trend line. I like this, especially if we can sort of walk up to here, move down and then break out. I think that would be a really nice entry for me. Bitcoin still sideways. I wonder how many people got trapped yesterday on this 5-6% pump, whatever it was. Again, zooming out reveals that we're still sideways, still boring, and I still currently stand by my thesis that we're going to wander up here into the purple box. If you watched the video for any amount of time, if you've been following the channel for any amount of time, you'll know exactly how I feel about this. Bitcoin has been adopted by a Central African Republic, and the IMF is concerned about this. This is the second country the IMF is annoyed at for adopting the Bitcoin standard, and you love to see it. Of course they're annoyed. They'd rather be indebting these countries and forcing them to be in their pocket to follow their persuasion and bullying techniques. So of course they're not going to want these places to have their own money and their own Bitcoin standard and be free from the IMF debt. So you love to see it. I'm sure we'll see more of this game theory play out. More and more places are going to adopt Bitcoin as legal tender. Saw that Panama is looking to approve the use of Bitcoin and 8 other cryptos without limitation. Those 8 other cryptos, in case you're wondering, were Ethereum, XRP, Litecoin, XDC Network, Elrond, Stellar, IOTA, and Algorand. More and more countries are going to follow. It's great to see. Gucci has begun accepting Bitcoin in some of its stores. So if you're into that thing, you can spend your Bitcoin on Gucci. And I'd like to leave you with this from Jordan Lindsay. Jordan's a master and has produced this chart, which is frankly beautiful. It shows that every 365 days, Bitcoin moves up 107.17%, and then 366 days later, 107.17%. 1 year later, 107.17%. 1 year later, 107.17. You get the point. 1 year, 107. So what we're seeing here is a trajectory of 107.17% every single year for Bitcoin. And that sort of suggests that the January 2023 minimum price expectation is 60,000 US for Bitcoin. It is, of course, the norm to trade well above this yellow mean line. So how are we about to start a big bull market? I'll leave that to you to ponder. In the meantime, I hope you enjoyed today. I guess in summary, the Fed's going to keep raising rates for a little while, although I believe that we are only a month or two out now from the pivot. Something is going to either break, or they're going to be able to say, yeah, look, we got inflation under control, happy days. So either way, all paths essentially lead to a dovish pivot from the Fed, followed by more inflation and therefore asset prices to the moon. You do you. Personally, I'm not looking to jump in here, and that includes equity, gold, anywhere. I'm not really looking to jump in here. I'm going to give it a couple more days for the dust to settle. You know my plan: break out of this line for the equities, break out of this line for gold, and for Bitcoin, I still hold my spot, waddling up into this box, I'm sure. Can we go lower in the meantime? Of course, everything's on the table, but staying nice and calm and neutral, and I'll be trading the charts in front of me as we continue to do this on this channel. So if you've made it this far, thank you very much. Thank you to all the new subscribers. Like, comment, subscribe, all of that stuff, and until next time, take care.